Once again, welcome everyone. Thank you for joining us for today's webinar. I am Niveta from Relativity Management Solution India Private Limited. I would like to invite Mrs. Geeta Murugan to talk about relativity. Mrs. Geeta Murugan is Associate Vice President and handling business development team at Relativity over 10 years now. It's over to you, ma'am.
Yeah, thank you, Niveta. Am I audible?
Yes, ma'am.
Yes, thank you very much, Niveta. I would like to welcome all and very good morning to one and all. Today's session is a regular session. As you all know, we conduct this webinar every month. And this update is about payroll, taxation, and compliance updates that keeps on coming. We would like to give this update every month for the benefit of HR people, and that's how the session is also going to be for today. So before going to the session, as you are all eagerly waiting for the session to know the updates, let me take a few minutes to talk about relativity, what we do, who we are, and what's our specialization. As you all know, relativity is into payroll outsourcing. We are a leading provider of payroll as an outsourcing service, and these are some of the service lines that we deal with. Payroll processing, it's audit. QETDS compliance, it's audit. Statutory compliance, it's audit. CA and ROC compliances, tax compliance, and its audits, and digital form 16 are the major service that we provide. Apart from this, we also conduct certain workshops and other services, which are small services, I would say. The major category are into payroll, taxation, compliance, and accounting as big service lines verticals for us. Next slide, please. Our values, we have started our company 2018, and today it's like 23. It's going to be New Year. We are into a 14th year celebration this month, and that's the longevity that we have with the industry. We have a mission to be very reliable and consistent and provide a world-class payroll service for our clients. And that's our mission. And towards that, we are working really very hard. The values that we carry with whatever we do is the quality, one thing that we do not compromise. And the second thing we do not compromise is the integrity part. And then the third thing is about the excellence with passion. I would always say, even with our new recruits, we see if the people is really having the passion towards what they are willing to work with. So that's how we carry our values with each and every one of us working for Relativity. And Relativity has the major employee expertise in chartered accountant, payroll specialists, taxation experts. We have labor law advocates, audit practitioners. These are few professionals we have to enhance our service delivery and to be very proactive for the clients that we work with. And the functional expertise, that's how we are called as compliance experts by our clients. To name few of our clients, the big names you can see is like Hyundai, Royal Enfield, Oracle, Cisco, Infineon, Polaris, Pyoda. These are few companies that we work with. There are about 155 plus companies across. These are few clients to name. And we work with multiple industry lines, majorly into IT, ES services. But then we work for a wide range of industries across 16 cities in India. See, these are some of the specific solutions that we provide for large enterprises. Large enterprises, I would say, like more than 1,000, 1,500 employees, up to whatever the number is. The end-to-end ETDS compliance and audits is our specialized service that we provide for large enterprise. end-to-end payroll management of payroll lodgement services, and then audits, digitalization and distribution service, PF management and compliance service. And then these are some of the other services that we do for large enterprises. The large enterprises would look for customization, which we are very good at. What is the existing system they have and what is the integration that is required with their existing system. We undergo a proper audit with them and understand their needs and do the customization for the company. Yeah, if these are a few services for mid-sized enterprises: end-to-end payroll processing, statutory compliances, end-to-end ETTS compliances, payroll lodgement services. If I say mid-sized companies, I'm mentioning it less than 1,000 employee size. So these are few services for them, and the main thing medium-sized enterprises would look for is about the integration part. The second main thing the existing customers looked with us is for the scalability and versatility that we have. These are a few things that we are capable enough, and we are doing a wonderful service to medium enterprises. And Relativity solution to small companies, especially the startup to up to 250 employee size companies, where we are very proactive, I would say, because these companies will not be very much updated on the process or the industry standards that they are required to follow, which we are very capable, and we proactively do the framing and process setting and procedures that are required for them to implement a certain new policies and things. We do that for them. That is the focus service, and the entire services, I would say, right from the employee recruitment to the exit, whatever the employer is supposed to deal with the employee, we are proactively advising the company and executing the payroll for them. So small companies up to 250 is the mention that I would like to give here, and these are few services for them. These are some of the facts, interesting facts about us. We are from this month, it's like 14 years and we are still young. And clients, we are counting 155 plus, and there are some transactions, that is 12 lakh transactions per quarter we do. The accuracy rates we carry out is 99.49, and the number of cities we work is 16 plus cities in India. And Form 16's issuance, we have done 4.7 lakh. So the one thing that is not mentioned here is about our retention of customers. It is 99.9% of retention we have, which gives us a biggest pride for us, because once the customer is happy, they are with us for a long term, and that's the speciality with Relativity. And with this, I am allowing for the today's session. So thank you for the opportunity for this 5 minutes about Relativity. Yeah, thank you very much.
Thank you, ma'am. First of all, we would like to inform that due to unavailable situation, presenter Mr. Akash cannot able to handle the session today. So one of our experts, Mrs. Padmajyoti, is going to handle the section. She is leading the team of payroll and taxation at Relativity over 13 years now. She is an enthusiastic human being, interested change, initiative and diversity at work. It's time to start our webinar. Let's start, and over to you, Mrs. Padmajyoti.
Thank you, Niveta, for your introduction. Good morning to everyone. And in today's session, we are going to discuss about certain latest updates in the EPF Supreme Court verdict, which have been released in the last month. And also, we are going to see about the what and all updates or amendments which we have claused for the which has been released in the month of December. And what all certain activities that we have to do or we have to take care in the month of December, that also I have included. And in the mid of a session, if you have any questions, please put it on the chat box. At the end of the presentation, our team will respond to your queries. So first, as I mentioned, how employers have to be prepared on the EPS verdict of the Honorable Supreme Court. Before going into this in detail, first let us understand what is this amendment. Before that, how the pension has been calculated. If we had the background of that, and then we will go about the amendment and how the Supreme Court have accepted whether it is going to be upheld or it has been rejected like this. So until 2014 August, the employer contribution diversifications towards the pension fund and provident fund, it will happen. For example, if I'm contributing 1,000 rupees to, if employer is contributing 1,000 rupees to the PF account, then 8.33 of that 1,000 rupees, 8.33% of that 1,000 rupees will go into your pension account, and the remaining amount will go into your EPF account, and there is no cap for the pension. So whatever I'm earning, 8.33% it's go to pension account, and 3.67 contribution of employer will goes to the PF account. In the month of August 2014, EPFO introduced a latest amendment. So in that amendment, they have come up with the 3 or 4 items. That is one major thing is they have capped the maximum pensionable salary. So earlier it was whatever employer is contributing 8.33 directly it went to the pension account. After in this amendment they have put in a cap that maximum employer pension, maximum amount that diversification will go is rupees 1,250. That is the pensionable salary that they have a cap for 15,000. Okay, and also earlier maximum we are contributing on the maximum salary, right? And in the amendment they had provided an option to an employee to opt for do it on the actual salary. For example, if my PF wage or my basic is 25,000, there was an option provided to an employee. Either they want to go for in 25,000, 8.33% they can invest it in a pension. So that option have been provided to each and every employees to opt out whether they want to do it on actual salary or they want to go it on the maximum pensionable salary, that is 15,000. So this option have been provided, but the default option is the employee will opt out, the maximum cap will be implemented. That is the default option. If an employee want to go contribute on an actual salary, then they have to go, then they have to opt for that option actually. And if an employee choosing that I want to contribute more on pension, that my employer contribution would go more on my pension contribution side, my pension investments, then for the additional amount, whatever the investments that they are doing, right? For that 1.16% exceeding the pensionable salary have to be contributed additionally by the employees. So earlier what the government will do, no, employer will do 8.33% as a pension contribution and government will contribute 1.16% towards the pension. So after introducing this pensionable salary limit, so if I want to go for actual salary, then the EPFO said whatever the exceeding amount that you want to invest in the pension, for that additional 1.16% has to be contributed from the employee. That will not done by the EPFO. That is the second thing that they have introduced. And also for this exercising, they have provided a 6-month option. And as I mentioned earlier, the default was it will be capped to 15K. So this is the amendment which has been introduced in introduced in the month of August, and the same will be affected from the September 2014. So because of this, if you see most of the higher salary employee, their pension is getting negotiated. Their pension contribution is coming down, so that at the end of the retirement, the pensionable value also will be less while compared to the earlier. So most of the unions and all, they have filed case against the EPFO in various courts like Delhi, Rajasthan, and high courts also. So why they are, the major reason for to apply is right to the social security, because everyone needs that pension amount at the end of the retirement. For that one thing, and also this option, EPFO have provided an option, right, that whether I want to choose go for the higher actual salary or for the minimum pension. This option, it's not been transparently explained to all the employees. There is no clarity have been provided by the EPFO at the time of this scheme introduction, this amendment implementation. So most of the people doesn't have any clarity, and automatically default whenever we are doing some implementation, no, the default option should provide a benefit to the employees. It should not cut the benefit. So in that case also, they have filed the case against the EPFO. So all the courts also doesn't accept the changes provided by the EPFO. Then finally EPFO went to the Supreme Court, and Supreme Court have given a judgment now. What is it? In the in that amendment, there was 4 updates have been provided by the EPFO, right? So in that, 2 things Supreme Court has accepted. One is maximum pensionable salary is capped at 15,000. That is, they have accepted. And option to opt for pension on actual salary, that is also they have accepted. And they have rejected on certain items. Let's see what and all items that Supreme Court has rejected. One is the additional contribution of 1.16 percentage. For this rejection, Supreme Court or everyone says, as per the EPFO Act, it has been clearly mentioned employee has to contribute only 12% of their PF wage. This amendment is over the law, because it is made already there 12%, but as per this amendment, they are requesting employee to contribute 13.16%, which is not acceptable at all. So they have rejected that additional contributions has to be done by the employee. And the Supreme Court says this contribution have to be provided by the EPFO or the central government's. Employee will not make any additional contributions of 1.16%. And the exercise option within 6 months, and the default was pension capped at 15K, right? For this exercising option, what they have said is, since there was no clarity or there was no clarity, and there was certain guidelines have been instructed, has not been provided at the time, they have rejected that option, and Supreme Court requested the EPFO. Supreme Court requested the EPFO to give another 4 months time for the employees who joined before, who are active as on 1st September 2014 in PF, for them to opt for this pension. So now the employees have an option. Even from 2014 September till now, their pensionable salary have been capped to 15,000, right? And if they have missed out for opting for the higher salary, and this option have been provided once again to the employees, and it has to be given for the 4 months, and for the members who are active on the 1st September. This is one thing Supreme Court have been introduced. They have informed to the EPFO to do the necessary things. And second thing is, as an employer, how it will be implemented. From the employer perspective, they have to do certain items, right? So what and all things employer has to do? First, they have to give awareness to all the employees who joined on or before 1st September 2014 regarding this change, how this change will get affect their PF balances, and how it will get benefited also. So these kind of awareness that employers has to do it. And second thing is, once the option is enabled, EPFO has to come out with the guidelines and how they are going to do this activity. But at last, what is required? No, there will be a joint declaration has to be provided by the both employer and employee for this opting out option, whether the pension has to be calculated on the actual salary or on the maximum pensionable salary. For this, there will be an option. These are the two items that employer has to do on their employer has to take care. And detailed guidelines also will be released by EPFO in the upcoming days. Still now there is no instructions have been provided. Once we receive the instructions, we will update the same in the next upcoming monthly webinar. So this is about the changes which has happened in minimum pensionable salary. And next we are going to see about the latest updates or amendments which have been released in the month of December. First thing is LWF contribution. As you are aware, the companies which are covered under Shops and Establishments Act, Labor Welfare Fund contributions will be deducted. In certain states, it will be deducted on half-yearly basis. Certain states, it will be deducted on a yearly basis. So in Tamil Nadu, this LWF contribution of an employee, earlier it was rupees 10, now it has been increased to the 20 rupees. Like the same case, employer contribution from earlier it was 20 rupees, now it has been increased to the 40 rupees. So these contributions has to be deducted in the month of December payroll, and for the employees who are all active as on December month, for those employees we have to deduct it. This is one of the update. And next thing is EPFO contributions. As you are aware, in the last year itself, employees who are contributing more than 2.5 lakhs in the provident fund, the exceeding amount will be considered as a taxable PF contributions. So here I have given an illustration how the taxable PF contributions will be calculated. In my use case, for example, if you take the basic salary is 2 lakhs per annum and they have a special allowance of 24,200 and the contribution towards PF, that is 12% of a basic. For example, for 2 lakhs, 12% is 24,000. So I have taken as a 24,000 is a monthly base PF contribution. For this, if we calculate it on an annual basis, it will come around 2.88 lakhs. So the contribution towards PF is more than the 2.5 lakhs. So how the taxable value will be taxable PF will be calculated? No, from 2.88 lakhs, whatever the contribution I am doing minus 2.5 lakhs. So here the exceeding value is 38,000. So for this 38,000, whatever that interest that the individual is earning, that is fully taxable. And up to 2.5 lakhs, whatever interest that we are getting from the PF account is non-taxable. So they have also come out with in your passbook, this is how will be the transactions will be. This have been already informed by the EPFO in the earlier months, but they have also now they have confirmed this is the methodology how they are going to update in their passbook. So for example, if you take in your passbook, there will be an opening balance. So the opening balance, whatever that we had in the last PF year, the closing balance of the last provident fund year will be considered as an opening balance here. So whatever amount you had before this financial year will be considered as a non-taxable. And for this year contribution, 2.5 lakhs will be mentioned under the non-taxable, and the taxable contributions of 38,000, the use case that we had, right? So in that case, what is the taxable will comes under the taxable head. So there will be another column, the total balance before the interest. So it will, it's just a sum of opening balance and the contribution for this PF year. And then there will be a separate interest credited to the account. For the non-taxable, there will be a separate interest income column will be mentioned. And for the taxable, there will be a separate interest column also mentioned. So whatever, for example, in this case, interest income that we are getting it from the taxable, right? That is 3,230 rupees. That will be added to your taxable income. For that, the individual has to pay the taxes. So while you are doing the PF contribution, please have a check on it. In case some persons will do voluntary PF and all. So whatever whatever contributions I am doing towards the PF, if it is more than 2.5 lakhs, for that principal amount, the interest I am getting from the PF account will be taxable. So please plan your financials accordingly and provide these awareness to the employees also, because most of the employees might not aware that exceeding 2.5 lakhs will be taxable or like that. And the next thing is, in a specific economic zone, there is an option that they have been introduced, a work from home option. It is already there, but they have extended this applicability till 31st December 23. So there is no mandatory for all the units comes under the SEZ. They have to come to the work from the premises. They can even work from the home or from outside the SEZ premises, and these changes will be applicable for all the units whose comes under the SEZ. So this has been extended till 31st December 23. And the next item as an employer have to do is list of employees we have to share with the development commissioner before 31st Jan. We have to intimate them that these are the employees, they are currently going for work from home, and that intimation has to be provided. And also every month we have to maintain a list of employees working from home, or they are working outside the cells, or they are working inside the cells. Like that we have to maintain a list, and this is mandatory to follow it. Please make a note of it. And every month we have to maintain a list, and we also have to provide the list of employees to be shared with the development commissioner. This is one of the update that we have got it from the SEZ zone. And the next thing is, there was a ESIC inspection drive is going on. Currently, what ESIC department is doing, right? They are going out for the random inspection drive, and it is majorly focused on the units that are not registered under the ESIC Act. For example, if you take for in certain companies, their base salary itself more than 21,000, right? For the employees, whoever that they are recruiting, their base salary itself more than 21,000. Then most of in certain companies they will not have done the registration. So if you haven't, there is no employees eligible under the ESIC Act, but still it is required to be registered under the ESI, and we have to file the nil returns every month. That is one thing. For those kind of units, they are going for a random inspection, and also they are going for a random inspection to the companies or the organizations who are not complied with the laws, who are not complied with the ESA Act, they are not making the payments regularly. For these kind of thing, they are going out a random inspection, and we are expecting the same kind of inspection drives will be happen till the next quarter. So be prepared. If you are not registered under the ESA, since your employee is not covered, anyone is not covered under the ESA Act, please make the registration. Please do the registration now itself, so that you may get avoid from these kind of inspections. So this is one of the update. And the next update is, as you are aware, 2022, now we are in December 2022. As per the local labor compliance, we have to do certain filings, and we have to do certain things. So here I have list down what are the things that we have to do it as a mandatory. One is labor welfare deductions. From every employees we have to deduct in the month of December, and the same has to be remitted to the department, to the labor department in the month of January. Before 31st of January, we have to remit to them. So that is one thing. And next thing is submission of holiday list. For 2023, the holiday list you have to be prepared, and the same has to be submitted to the local labor officer, and we have to get the approval on it. That is one of the activity has to be done. And there are annual returns and renewals that we will do, so that also has to be taken care. So these are the items that we have to take care before this December itself. Please make a note of it so that you cannot miss on these items. This is I have completed my presentation. If you have any questions, please put it on the chat box. I will go through each and every questions and I will reply to your question. But the capped amount is 15,001, right? Yeah, Saranya, as you have mentioned, the maximum cap amount is 15,000 only. Minimum pensionable salary, it's have been aligned with the Minimum Wages Act. So the maximum amount that employer capped amount is 50,000. With LWF, the salary limit present it is 25,000. Kindly clarify if there are changes, if any. Usha, are you asking for Tamil Nadu or you are asking for any other state? Because the labor welfare fund will be different from state to state. So which state are you all mentioning about? It is for Tamil Nadu. Actually, there was certain employees who had, based upon the categories, it will be differ. I think Arun is the right person to answer this question. Arun, are you there in the call?
Yeah, Padma. What?
Arun, actually, Usha had a question that there is a salary limit for the LWF, right? That limit is 25,000 or not?
No, it is 15,000 managerial and supervisor capacity exempted. 15,000 is the cap, Padma.
Okay, Usha, I think your question have been answered. That maximum cap is 15,000 for the managerial category and above. And from Kavita, I have received a question for PF contribution. Both the employer and employees will be considered. In this case, 2.88 lakhs per annum is total of employer and employee. No, here we will consider only the employee's contribution towards PF. We will not consider employer contribution. So in this use case, I have mentioned that 24,000, it's a 24,000 per month, it's a employee's contribution. Is EPFO department deduct the tax and deposit to the IT department directly at the time of interest credit? Employer no need to calculate the taxability on PF interest. Is this right? Ashok, actually, we haven't received any notification about the TDS deduction on the interest part, how they are going to do it. Currently, it has been released that interest, whatever that they are crediting to that PF account, and the same in passbook, it will be it will be mentioned in two different columns. That is what have been notified till now. Once we get an update on this, we will update you. Then why PF contribution? Saranya, I'm not able to get through your question. Can you please unmute and Nimita, can you please unmute Saranya so that she can explain her question in detail? In the meanwhile, we will go for the next question. Request you to explain on opening balance, non-taxable contribution and contribution. For example, in PF account, there will be a yearly balance, it will be maintained, right? For example, February PF year starts from March to February. It's not as like as the financial year. For Provident Fund, the year will start from March and it will end on the February. For this, for every PF year, there will be a separate passbook will be viewed and in the new format. So whatever the closing balance which is there in the month of February 22 will be comes as an opening balance in the month of March 22. So that is the opening balance. And non-taxable contribution is, for example, from an employee, if we are deducting PF 3 lakhs for the financial year, for the period of March to February. If we are deducting 3 lakhs, then in that 2.5 lakhs will be considered as a non-taxable contribution. and the 50,000 will be considered as a taxable contribution. I hope your question is answered. Next question, I think might be answered most of the question. Is this capping only for Tamil Nadu and earnings more than? Yes, Sanya, as you mentioned, PF is for the whole India, and Labour Welfare Fund is applied for the state wise, and it will differ for the each and every state.
Hi, ma'am. Good morning.
Is Bhadra's childs also have been capping for Tamil Nadu LWF? From Deepak, I have received a question. What are the annual returns to be on your annual return forms to be submitted for SND Act? Arun,
Yeah, Padma, it is a detailed list. Maybe we
can you answer this question actually?
Padma, it is a detailed list. We can email them. We can get the email ID and we can email them.
Okay, Deepak, just drop your email ID in the chat box so that we will share the detailed list of annual returns and forms which has to be submitted as per the Shops and Establishment Act. Could you please tell us which? Deepti, for you also, please put your email ID in the Dropbox so that we can check and reply in detail, because the list was too huge. And there are multiple returns has to. So please put in the chat box which state you belongs to so that we can also help on exact details. From Divan, I have received a question. ESIC is based on the basic or it is based on the gross? Actually, ESI applicability is based upon the gross salary. It is not about the basic. The total gross salary, whatever that we are providing, no. So based on that, it has to be deducted. If it is more than 21,000, then ESI is not up. The employee is not eligible for the ESI deductions. Otherwise, the ESI contribution has to be done. Next, what is the annual returns? Rajesh, please put your email ID in the chat box so that we can able to share the list of things that has to be done. And I received a question from Balaji to opt for the higher pension at actual salary, whether the joint declarations to be provided to PF and what is the due date. Balaji, till now we haven't received any kind of declaration format or the due date to do this joint declarations. Once we receive the same, we will provide an update on that, how it has to be done. So what are the items that has to be there in the joint declaration and when is the due date? So those items we will include in the next month webinar. I will request you to attend our monthly webinar continuously. So whatever the important updates that have been released, we will cover in this webinar. What are the annual ID so that we can share the list of annual returns to be filed. Arun, actually, we have received a question from Usha. For manager cadre, 15,000, it has been mentioned as a LWF salary limit. For others, for manager cadre, 15,000. For others, for other blue collar worker, but in website it is showing as a 25,000. For whom the limit it is under LWF. Can you please give us a highlight for blue collar how it has to be calculated and others how it has to be calculated on the limit aspect?
Padma, in general, LWF department is suggesting that we have to contribute for respective of the cadres. Okay, with specific to LWF to Tamil Nadu, only managerial and supervisor cadres. for the managerial or supervisor capacity, drawing wages exceeding 15,000 or so apart from that, all the cadre of employees are supposed to contribute to LWF.
Arun, your voice is breaking. As by my understanding, it is from the labor office they have requesting us to deduct for all the employees, right? That is better to do it. And if we are going for the exemption thing for managers and other categories, maximum the limit is 15,000.
Supervisor can, yeah.
Yeah, manager and supervisor category. And also in this, the designation is not a matter. The job description has to be aligned with the manager and supervisor, no?
Yeah, you are correct.
Okay. And Saurav, I have a query related to employment contract or sub-consultancy agreement. Please, I unmute so I can explain. Saurabh, I think Niveta, can you please unmute Saurabh so that he had some questions? We can ask him what he had. What is the question exactly?
Good morning, ma'am.
Yeah, Saurabh.
Basically, I have two queries. One is related to LWF, but it's for Maharashtra. All employees are engineers, but we are providing engineering consultancy to government projects like railway and metros. So that eligibility as per Maharashtra Act is if employee is getting 3,500 salary or lower, then they will be eligible for LWF. So our employers is getting more than salary. So annual return is required for that. Like as a ESIC, you told us registration is required and returns nil return also should be filled.
Yes.
So in the case of LWF is required.
Arun.
Repeat the question.
Arun, actually, he had a question. In Maharashtra, the maximum salary limit is if employee is getting less than 35,000, then the LWF has to be deducted. In his organization, there is no employees who had a salary less than 35,000. So there is no deduction is
3,500.
13,500. Okay. 13,500. There is no LWF deduction is happening. So since whether we have to do a nil return finding like what we have suggested for ESI, that is what is discussed.
Yes, it is required, Saurabh.
Okay, thank you, Arun. My next query is basically we have two type of agreements with the employees. One is the permanent employment. We are issuing offer letter and appointment letters. Another is we required people like as engineers, professional engineers, architect. We required for a specific time period or task, like as for 6 months, 12 months, or maybe 2 years also. But for the specific project, so that time we are creating sub consultancy agreement. So we will consider that employees like as a employment or we'll consider in a contract labor. Which type of labor we will consider that?
Any type of employment which who they support the production of the company, they'll be part of the employment and they should be considered for all the statutory compliance requirements.
Even we are issuing a separate contract letter.
Yep. If they are contributing to the production,
Yes.
So then they'll be applicable for statutory norms.
Okay. Thank you, Arun. Thank you, Padma.
Yeah, thank you, Saurabh. And we have received a question from Sunil Arun. He asked, should we deduct LWF for all employees irrespective of grade?
Yeah, it is suggested we should be contributing to LWF for all the employees. So will not end up in any non-compliance. But as the rule states, the managerial and supervisor capacity we can exclude. It can be done, but we are suggesting that we can do it for all the employees.
Okay. So the next question that I have received is why the 2.5 lakhs more than that is taxable? Taxable and balance is up to 2.5 lakhs is considered as a non-taxable and balance is calculating as a taxable, right? So just the explanation is required. they have mentioned. So in the previous financial year, income tax department from the Ministry of Finance, they have introduced one special clause that earlier, whatever, for example, if you are investing more than 2.5 lakhs, for example, if I am investing 10 lakhs in EPF account, whatever interest that I am getting for that 10 lakhs, right, that is fully non-taxable. Here they are speaking about the interest which I am earning from the PF account. It's fully considered as a non-taxable. And also, if you think to get the return as a non-taxable, right, because this is provident fund is a triple E regime, exempt, the investment is also exempted, the interest whatever I am getting from that account also exempted, and the growth also exempted. So whatever I am doing in that EPFO account is fully exempt, right? Now they have moved this account, this concept to partially taxable. So the return which I am getting from the PF account, it's partially taxable. For example, what they have done is until 2.5 lakhs, if you are making a contributions towards a provident fund up to 2.5 lakhs, if your contribution is less than 2.5 lakhs, then the interest you are getting from that 2.5 lakhs is exempted. They are not, the interest which you are getting from the 2.5 lakhs is exempted, then there is no taxes to be paid. If I have taken a 10 lakhs as an example, right? So in this case, if you see there was a 7.5 lakhs, I am making a more contribution. So from that 7.5 lakhs, whatever interest I am getting from the provident fund account will be considered as a taxable, and it will be added to your normal income. So in which tax slab as an individual you are coming, for that tax slab, the taxes will be deducted. Taxes has to be paid. While filing your IT returns, it has to be paid actually. So if you want to do, if you are doing some voluntary provident fund contribution, you can also look on it. And if you want to reduce that, or if you want to make it as a null, that also you can do it. But until the principal contribution, if it is more than 2.5 towards the PF, then the interest that you are earning from that account is taxable. It will add it to the normal taxable income, and taxes will be calculated on the actual tax slab. If your comes under the 30%, then 30% income tax. And if you had a surcharge, if your total income is more than 5 crore, then you have to pay surcharge and you have to pay education cess also. I have received a question from Raja. Can you please clarify on ESA registration? Raja, you want to know about the exact process of that? So ESA registration, for example, if an organization have crossed more than 10 employees, then it is mandatory to register under the ESA Act. Whether the employee is eligible for the ESI, it's not a matter. Only the employee headcount is matter. If you have crossed more than 10 employees, then it is mandatory to register under the ESA Act. From Usha, I have got a question whether the opening balance of EPF passbook is EPF, EPS, or employee PF. Actually, this opening balance is about the employee PF contribution. It's the employee PF contribution. So here the pension and employer provident fund contribution will not comes into the opening balance. And from Patricia, I have got a question: how much tax will be calculated on the PF? So I have already mentioned, no, whatever the interest I am earning from that excess contribution will be taxable at the normal rates. It will be added to your taxable income and taxes will be calculated on that. Sandeep, please summarize the latest Supreme Court verdict on EPF and EPS. Okay, Supreme Court have accepted that the maximum cap for the pensionable salary is 15,000. That they have accepted, and for to exercising the option, right? In the initial time, there was no much awareness or clarity have been provided by the EPFO. They have requested EPFO to provide another 4 months time, and EPFO will open the window slot for this, and based upon the in that period, those employees can do this opt out option changes. They can go for the higher salary, that option that they can do it. And the third thing is, in the earlier amendment, it has been mentioned additional contribution of 1.16 percentage has to be done by the employee, instead of Supreme Court have said it has to be done by the EPFO. That is one thing they have mentioned. So these are the major updates in the these are the summary points of the latest Supreme Court verdict actually. If PF remitted amount is more than 2.5 lakh annually, it is taxable. Do we need anything to do from payroll side? Actually, for this EPFO, if the contribution is more than 2.5 lakhs from the interest which I am getting, no, from for this, it's there is no action point that has to be taken from the payroll end. It has to be considered by the employee while they are doing the IT returns filing. This income will be get added as a taxable. That's it. Please share the. So we have noted down your email ID. So we will share the annual returns list and for which location it is to be. Pension scheme verdict. Can you share the copy? Yeah, we will share the verdict, Supreme Court verdict to your email ID. For complete annual returns, salaries 20. From Vasudha, I have received a question. If salary is 21K, will ESI will be applicable? Yes, the ESI will be applicable if your salary is 21,000. The employees whose salary is more than 21,000, those employees are not eligible for the ESI. Whether annual return filing on online is enough or we have to do the offline filing. Usha, actually there was certain filings have to be taken care in online, certain filings have to be taken care as offline. So we will in the list we will share it with you what kind of in what way it has to be done, the mode of filing also. Can you
Hi, I'm
share
Ashik
the
from Ahmedabad. I have one question.
yeah Jennifer.
We have one director who is also all-time director and employee. His currently age is 67. Now he do not want to pay a contribution. So how can we do that? Because he will be continued as an employee as also the all-time director. Is it possible or not?
I think it's possible, and the age is more than 50, right?
Yeah, he is
58 or
67.
something. 67, no? I think there was certain action item has to be done. Arun,
Yeah.
can you please
Yeah,
explain the
Padma,
important
that's how I respond. So, I mean, you have to convert him as an individual consultant, Ajay, and also we have to do the consulting fee with the TDS under 194J. So, he'll be considered as an freelancer. So, in that way, we can exempt. Otherwise, there is no option to exempt under the EPF.
I'm sorry, I didn't get you. Can you please
So
repeat that?
you have to convert him as an individual consultant.
Okay.
So, and you have to deduct the TDS under 194J.
No, but he would be continued as a whole-time director because he is also as a registered as a factory occupier.
Okay.
Under the Factory Act.
Yeah.
So he
So
will be
if he
continued as
is,
an employee. So how can we do that?
so if he is drawing salary as a director, then there is no minimum option that we have to contribute to the EPF. Otherwise, if he is converted as a consultant, I mean under TDS, then we can exempt him under the EPF.
No, currently even also we are deducting PF as per the selling 15,000 at 1,800 per month only, company as well as himself. But now he do not want to continue this one even also. So he want to discontinue from the PF membership. So is it possible or not? But he will remain continue as all-time directors.
Yeah, that's what I said. Like if he is continuing as a director drawing remuneration salary, so then there is no option for him to exempt under EPF if he still if he is contributing to EPF.
Okay.
Yeah.
So that could be continuing. Okay.
Yeah.
Right. Okay.
Okay.
Thank you.
Yeah. Arun, also we have received a query from Chinmaya. If we have no ESA employees but have employees work from dummy or small offices employed from branches, is this mandatory to register all the branch offices or we can attach the employee to the main branch office?
Yeah, considering that we the whole salary, I mean the payroll is under one cycle, I mean the one entity, or it is done on multiple branches.
It's having multiple, its payroll will be under the head office and
Okay.
they will
So
have a
then,
multiple branches. Either, for example, if you take Relativity is having a head office at Coimbatore, right? And we are having a branch at Bangalore, Chennai, and other cities also.
yeah,
So, and there is no
it is mandatory, Padma. It is mandatory to register under ESIC.
Okay, even for branch officers, we have to
Yes,
register
yes,
it mandatory,
yes.
right?
Subunit, as a subunit, you can register.
Okay. Chinmaya, we have to do as a subunit registration in the portal for all the branch office. It is mandatory, has to be done. I have a doubt and ESI if an employee gross salary per month is 1 lakh, employee has left the organization. Okay, Raja, actually ESI eligibility will be based upon the theoretical, that actual salary that you are providing, no? It is not based on that only eligibility will be calculated. It is not on the earned salary. It is based upon the actual salary. Even if they are leave for 20 days and they are getting a lesser salary than 21,000, then ESA is not applicable actually. Ajay Kota, I have a question. I think this we have answered it. And Raja, no, yes, okay. Please let me know about the schemes related to savings, so that we can avoid huge deductions related to income tax. Mohan Raj, actually, we have noted down this question and we will share it the details separately. Okay, because in this webinar we are not focusing on this item. So what we will do is we will share the list of savings that you can do it. Niveta, actually Raja have requested to unmute. I think whether we have unmute him or okay. So most of the thing that we have received, the other queries are it's related to the list that they have been requested, that we will share it to your email ID separately. And from Mahadeshwar, I have received a question. ESI salary means only basic or salary on hand? It's about the theoretical, the actual salary. In offer letter, you are providing a gross salary, right? Based on that, the ESI eligibility will be calculated.
Ma'am, I have a question.
I think someone had some query. Have spoken out.
Okay.
But your voice is very. Yeah, now I'm able to hear you.
Okay. My question is, according to the Tamil Nadu Labour Welfare Fund scheme, the government has posted one PDF which is in their own government portal, and it states that the maximum ceiling for the Labour Welfare Fund is 25,000. So we are talking about like 15,000. What is that confusion? I don't know. The government portal, it is given in the PDF that it is 25,000. The maximum ceiling salary limit is 25,000 to avail the schemes. So can you please explain on this?
Yeah, Arun.
Yeah, can you repeat the question? Hello. Hello.
Arun, actually, she is mentioning about, we have mentioned that maximum cap for the eligibility limit will be based upon if the employees whose salary is more than 15,000, then it's not required to deduct LWF, right? That is
Yeah.
what we said, no, but she is mentioning in the notification, it is mentioned as 25,000.
Can you state the date of notification? Maybe we can refer to it and we can email to them whatever the responses accordingly. We'll refer to that notification, Padma, and we can
Okay.
respond to it.
Actually, we will check with that notification and then we will come back to you on a detailed manner why it is on 15,000, how it has to be calculated on 25 or 15 or like that.
Hi, I have a question. Like we have got a registered office in Mumbai. So there we have registered as an ESIC, and from this year, like March 2022, we started an office in Rajasthan. That's in Jaipur, where none of the employees are falling under the ESIC. So do we have to register ourselves in another ESIC also? Like, do we have to show that we have opened another office from Jaipur?
Yes, it is required to be registered as a subunit for the head office, and it's better to have, it's mandatory to do it. We have to do a registration as a subunit.
Okay, thank you for the clarification.
Okay. Actually, I just run a poll about the today's session and regarding your feedback. Please provide your responses to this poll. So based upon your feedback, we can do the necessary changes or improvements in the upcoming session also. I haven't received any feedbacks. Can you please respond your poll? Can you able to see the, okay. Okay, thank you. Because from my side, it has not shown that nobody is answered. That's what I'm asking repeatedly. Thank you for your time, valuable time. And we establishment can transfer their code number registered state to another state. Arun, we have received a questions that establishment, can we transfer the code from one state to another state? Is it possible? Okay, actually we will note, Ankit, we have noted down these questions. I will get back to you after this webinar. We will reply to your question. Okay, thank you. Thank you for your time. Thank you for your coordination for this wonderful session.